Hey there, welcome back to the channel. So this video is a continuation of our previous video on VWAPs. So this is part 2 of the VWAPs videos. And I start out here because I want to mention to you that on this particular day, I took 15 trades for around $2,000, and the key thing to note here is that I've used some of the lines and some of the zones and some of the moving averages that I always discuss on all of the charts that I watch, and I use VWAP and intraday VWAP, and I use them on this day to take 15 trades with an average trade time of 22 seconds and a longest trade time of 57 seconds, and I made $2,000 that day. So anyway, enough bragging. What I want to do is I want to get back to the VWAPs video to show you the importance of not only having VWAP on your charts, extraordinarily important, but also to be watching intraday VWAP on the instruments that primarily open at RTH open or 9:30 Eastern time in the morning. And those would be instruments like SPY and Qs. Although intraday VWAP is also extraordinarily important on the futures products, which do run overnight. So if you haven't seen that first video, make sure you do see it. I'll put a link for it down in the notes below, but definitely plan on checking that video out. But here we are. We're going to continue on with VWAPs part 2, and let's get right to it. So here we are later that exact same day, and this is the bounce that I was just discussing a moment ago, which bounced 2 points, 2 or 3 points, easy $100, and then rolled over, blew right through VWAP right here, and started to come and dance around this half gap line. So what happened at this half gap line? Well, we've got SPY's half gap in exactly the same spot, and we've got SPX's half gap at the top of the range. So SPX's half gap is at the top of this range, and SPY's and ES's is at the bottom of this range. So what do we have? We have half gap bounces up to VWAP, down to half gap, up to VWAP, down to half gap. We've got SPY bounces off of half gap up to SPX's half gap, down to SPY's half gap, back up to SPX's half gap, and then the whole thing rolls over to SPX's previous day close. Now, what is significant at this area? And why did SPX blow through its close and then bounce? And the answer is that SPY wanted to reach down to this 200 SMA. And after the bounce, the market came right back down, hesitated at the 200 SMA, and came right down to the 200 EMA, and this is on the 5-minute chart. The yellow lines are the 200s on the 5-minute chart, and you have SPY's previous day close here. So as you can see, as I was saying before with the daily open, on this particular day, the RTH open, the cyan blue line, SPY and SPX and ES were almost on top of each other. But when SPX came down to its previous day close and said, hey, do we want to be trading below yesterday's close? That's bearish. That's beginning to trade into yesterday's trading activity. And when it finally broke its previous day close, it trapped a bunch of people that thought that it was going to be bearish on the rest of the day because it had broken its previous day close, when in fact, it was because SPY wanted to come down and test its previous day close, which just happened to be coincidental and aligned with the 200 EMA on the 5-minute chart. And these are the ways we use different indicators whether it's previous day close or the 200 EMA on the 5-minute chart or VWAP on multiple charts to come up with precise entries. And the thing is, if you're sitting here watching this and you're saying, well, all right, I see the 200 EMA on the 5-minute chart rising, and if it just so happens that the market bounces and then comes back down to a spot where they are together, and if there's some sort of coinciding line of some sort on ES and or on SPX, then I want to make a long entry there. And you make the long entry right there, and if it closes below this 200 EMA on the 5-minute chart, then you know your thesis is wrong and you kill the trade for a loss of $75 maybe. So as we roll into the ending of that particular day, we see that there's a lot of activity going on down here on SPY near the previous day close, which is, and I've taken a couple of the pivot point indicators off because they were all landing on this spot right here, and they were covering up the fact that ES's previous day close was also right at this area. So the market kept coming down, testing previous day close, up to half gap, down, testing previous day close, going beyond it. Why? Because there's a pivot point right here on SPY. And where does it bounce to? It bounces up to half gap, does a little dance there, bounces up to the 200 EMA, does a little dance there and retreats, goes beyond and goes to the convergence between the 200 SMA and VWAP and rolls over and tests the bottom again. And what happened on SPY? The same thing. We have that bounce off the pivot point up to an acknowledging half gap right there, the dashed yellow line, but actually goes up and touches the 200 EMA and retreats for, a couple $100 trade, and then runs up and can't quite reach its own VWAP and intraday VWAP, but that's because the reversal happened on ES right at this spot, and the fact that SPX ran up to its half gap and the 200 SMA. And these are the convergences we look for entries. Again, I'm sure I didn't take this short because I just think shorts they're too violent for me and they're too unpredictable. But what I do like is when the market will run beyond something and then come back and take a bounce off something. And even though I do not trade the market with 10 minutes remaining left in the day, this does look quite perfect in that it ran up and it ran down and bounced to the penny off of half gap, to the penny off of half gap on SPY. And by that time of the day, the institutions and the banks trading SPX, they're sort of doing their own thing and wrapping things up for the day. But this was an interesting way to end this particular day. So I'm not quite done here. I want to show you one more day, but before I do, let me ask that if you feel like you've gotten anything out of this video, please take a moment right now and click the like button for me. It would really help out a lot. And also, if you're interested in seeing me live stream my trades, consider subscribing and being notified for when I start that. That is, if there's enough people who want to see me do that. The way I look at it is that I can help myself by helping others at the same time. I mean, I'll have to be extremely diligent about broadcasting what I think are A++ setups if I'm being held accountable by a group that's watching. Likewise, it would help me keep from playing fast and loose with my stop losses, which I do from time to time. So hopefully it'll be a win-win situation by helping you recognize the pinpoint entries that I see every single day. So if you'd like to see that, leave me a message below and subscribe, and you'll be notified when I get that off the ground. Now, this last day, let's take a look at it. And I know that I've been talking about a lot of different convergent charts and indicators like the EMAs and pivot points and daily open and previous day close and things like that. But yes, this video was intended to be about VWAP and about intraday VWAP. So let me get a little bit more into that on this particular day right here, and then we'll wrap this up. So on this particular day, we opened at the cyan blue line and came down and bounced. Well, it turns out that we bounced on this pivot point on SPY, and it wasn't far from a pivot point on SPX at the same time. And it bounced, and ES and SPY actually touched their intraday VWAPs just about at the same time. And had you taken a short right there, this would have moved from 57.30 down to 57.26. So that's 4 points, $200. And then it bounced and ran through intraday and came up to the RTH open, which is a cyan blue line. But that green dashed line right there indicates that that was the previous day's low. Interestingly enough, the market retreated there as well. And then ran up to the point that ES and SPY and SPX met its previous day close. And initially, at least on SPX, by that time SPY had rolled through, ES had rolled through, but SPX said, no, we don't want to trade. We want to be bearish. We want to stay below yesterday's close. So it retreated. And then it tested it again. And then it slightly retreated. And then it blew through it. And then it retreated and strongly ran through it. Now, what happened after that? The market did roll over after it got back up in some of these other areas, like yesterday's VWAP close on SPY and this monthly POC level from September. But it rolled down, and what did it do? It bounced right here on VWAP again. And it bounced from 54.93 to 58. So that's almost another 4 points, $200. And then, of course, it rolled over again and came down to half gap and bounced there, which half gap on ES and on SPY was in relatively the exact same spot. And what happened at that time on SPX? It was also flirting with its half gap before bouncing. So anyway, that's all I have for today. Thank you again for watching. Again, if you like the video, please give it a like. It would really help me out. And again, let me know if you'd like me to begin live streaming. I would love to maybe get that off the ground and see how that works for all of us. So that's all I've got. Thanks again. Have a great day.